Hey everybody, Economic Ninja here. I hope you're doing great. We're going to talk about jobless claims, and this is one of those key indicators that we want to watch as we go into this housing correction. This is very, very serious. It's one of the things that I cover in the new course. If you want to see that, I got the discount code below before we're fully filmed and it's done. Continuing jobless claims near 11-month highs. The number of Americans filing for jobless claims for the first rose last week from 216,000 to 225,000. That's in line with the expectations, with the non-seasonality adjusted pace of initial claims trending notably higher. We do note that the state with the biggest drop in claims, which helps make the picture less ugly, is California, but that number was estimated. It shows here, but it is the ongoing rise in continuing jobless claims that should be a worry for Americans and cheer for the Fed. And there's a question mark behind it. And the reason why there's a question mark behind a cheer for the Fed is because the Fed wants and needs higher unemployment. Think about that. Think about that for a second. Why would the Federal Reserve need higher unemployment? That's a bad thing. You're like, but the economy's in tank. That's right, because the Federal Reserve knows that it is on the path to destroying the economy as it raises rates, because it printed tons of money and then raised rates. The economy can't handle that, right? And the Fed doesn't want to be looked at as the boogeyman. So it is hoping for higher unemployment rates so it could go, ooh, you know what? The economy's not that strong, so we're going to stop raising rates and then we're going to start to lower them as it gets even worse. They don't want to be blamed for all of this. That's what I've been trying to show all you guys. As they raise rates and they printed all that money because the dollar's losing value because they keep printing money, right? So they have to raise rates to prop up the dollar. Now what's happening is everything is stalling. Everything's stopping, like home sales. That's why we've been preparing with this this real estate crash course, because there's things you could do right now to get ready for it and watch. And one of these signs is jobless claims, right? And you have to wait to see if the Fed's going to pivot. But the problem is these numbers keep coming in strong. In this example, California, even though they said it's estimated, they're like, man, California's numbers made it less ugly. You can also attribute some of that stuff from California to all these government programs that California is giving out, right? There's less people. There are literally packages where California is like encouraging people to go to work. So they're doing all these weird things. So there's like these tweaks in the unemployment. It's a trip out here. We still have a problem where getting good, solid employees is difficult. However, I don't know anybody personally that's unemployed, but you got to look at the social circles that we all run in, right? Do I hang out with a lot of people that don't work for a living and are producing, being a good producer for our country, like helping themselves, their family, their country? Yeah, I hang out with people that work, that have value because they are producing something. They're not taking things, you know? So that's the problem. When we all ask our friends, like, hey, is anybody unemployed? Usually don't see that, especially in Ninja Nation, because we're all hardworking people. Now it says right here, this is the largest rise in continuing claims since the peak of COVID lockdown in June of 2020. So that's very important. This is the highest rise in those continuing claims, those extended claims. If we see this number, these continued claims keep getting wider and wider, that means that unemployment's getting worse. These people that can't find a job are really not being able to find a job. They are going to become disheartened and frustrated workers or people that are unemployed, and they're just going to give up. A lot of people do that. That's something we want to watch. So it says right here, so is the labor still tight? The 11th straight weeks of increasing continued claims suggest that Americans who are losing their job are having more trouble finding a new one. And it's very interesting. It's very true. It says right here, with claims and the household survey both signaling weakness in American jobs, that's great news for the Fed. So people are really hoping for a Fed pivot, but to be honest with you, I don't think they can, because even if unemployment gets extended, it's not blowing up, right? Those continued job claims are going longer and longer. The point is that we still have inflation. We still have a very serious inflation problem. And if the Federal Reserve was to give up right now and stop raising rates, or quite frankly, lower them, markets would cheer, stocks would take off. But think about the price of milk, gasoline. So again, it would lead to rampant speculation in the markets if you have interest rates stall or go down. So the Federal Reserve knows this. They are definitely caught between a rock and a hard place. And I'm not joking. In 2023, I think it goes nowhere but to a bad place. It's not bad for you. It's not bad for me if you're saving up money and getting ready for this. But I'm going to be honest with you. I'd want to be holding gold right now. All right, guys, I'm going to put a link down to the a real estate course below, the pre-filming discount. Once the course is done, it will go up. But this is before I'm just putting out a syllabus right now. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.